What's up, Alex? What's up, Chris? Doing good. Got some market volatility since the release of this monthly report, but excited to dig in with you guys a little bit and break some things down.
Yeah, what's on the agenda for today? What are you guys looking at?
Yeah, so we're gonna go over some of the stuff from the deep dive monthly report. For those that aren't aware, the deep dive is a Bitcoin magazine markets product where we kind of break down what's occurring in Bitcoin, but we do touch on some legacy, the legacy financial system a little bit, and kind of just dig under the hood about what's happening with on-chain derivatives. Kind of give readers, subscribers, a breakdown of why certain market moves are occurring and what to possibly expect. We like to talk in probabilities and not certainties, but so we kind of put that out on a daily basis and have free and paid tiers for the deep dive.
Love it. Yeah, I love to hear it. So guys, if you're in the chat right now, check out the description of this video. I believe we have, let me double check for you. Just do a little verifying here. Yeah, so we've got a link to the deep dive free tier. So if you haven't checked this out before, go get it. It's the latest in on-chain, market Bitcoin intelligence, and it'll come directly to your inbox. So check it out for free. We've also got a paid tier, which is a wealth of information and well worth it. Go check out both in the links in the description, you guys.
So Ansel and CK are coming in as well.
Yeah, they should be. I'm not sure where they are. We might need to let them in, Chris. Are they in the waiting room?
No, not yet.
Okay. All right, so we're chilling. What else is going on in your world, Dylan? What's happening with Bitcoin? Trying out any new call options or anything fun?
No, I have not bought any more call options. I actually trimmed a lot over the last month or a couple weeks here. Posted on Twitter a bunch about in July about buying some calls for across the board, but 50, 75, 100K call options. Essentially when the market was saying there wasn't a chance of that occurring in July. And so those did really well and then took a small hit, but still cashed a lot of them for profits. So yeah, it was more of just a speculative play though. I mean, I tell people, including myself and how I position myself. I mean, it's just a speculative position with a few hundred basis points of my overall, portfolio, if you want to call it that. I mean, I am not comfortable with less than a super majority of my stack in cold storage. And so sometimes if I think the market's mispricing something here or there, then we'll go out a little bit on the risk curve or bet on some volatility or maybe some upside. But for now, just kind of chilling. I think Bitcoin is going to consolidate here for a little bit, maybe bore some people out of the market, which I don't think is a bad thing whatsoever, and kind of prime up for 2022.
Yeah, I'm into it. Looks like CK just joined us. What's happening, CK?
What's up, guys? How you guys doing?
Good, man. We're just talking about taking on some risk in the Bitcoin market, taking advantage of some anomalies, maybe some call options, maybe some lending out your Bitcoin a little bit. You do anything crazy like that, CK?
No, I think that we have the opportunity to stack a lifetime and a generation's amount of wealth with literally cents. So I'm just doing that and then putting it into cold storage and, enjoying my my life with whatever my fiat can afford me.
Nice. Yeah, you love to hear it. There's all kinds of strategies for stacking out there, guys. Is Ansel joining us here shortly?
He should be. Unfortunately, the link wasn't communicated super quickly before, but I think he's about to join right now.
Okay, there. I see him coming in. I'm gonna hop off and let you guys take over FedWatch. So enjoy this live episode of FedWatch with Dylan LeClair, folks.
Sweet. CK, Ansel, how we doing?
Doing good, man. How you feeling about this price action?
Good. I'm loving it. I mean, just chopping the market to death. I think a lot of speculators and a lot of maybe traders or people that were in it just for the parabolic gains are gonna kind of leave the market here over, if they haven't already, over the coming weeks or whatever it is. And I think that's that's something that I encourage. Stacking sats on the cheap is not something I will ever complain about.
What are you and Sam talking about in your like daily meeting right now? Like, what's the most important thing on your radar?
Yeah, we're looking a lot at kind of what's happening in the legacy system. You have the FOMC meeting tomorrow. The Fed is pricing in 3 rate hikes in 2022. The dollar's kind of been strengthening relative to some other fiat currencies, and so we're looking at all the Bitcoin on-chain stuff, all the derivative stuff, kind of getting a feel for the market and kind of the array of scenarios that we could see. But I think one of the biggest things right now in terms of the Bitcoin price action and what market participants are looking at is the macro environment and kind of what happens next there. I think that'll be really telling, and it'll be interesting to see how that all unfolds.
Awesome. We're going to have a proper intro to the show in a second. Ansel's having a little bit of technical difficulties, so apologize about that. But yeah, how are you viewing leverage these days, right? I know you had some leverage bets. Did those unwind, or are those still afloat? I guess. What's your take?
Yeah, we talked about it a little bit just before you hopped on. I was pretty transparent about having some upside with some call options that I purchased over the summer, and those performed really well. And then kind of took a little bit of a hit with some pullbacks, and I've trimmed basically all of that and moved some out into further dates. But I mean, I guess in terms of on a percentage basis, assets, liabilities, I am still somewhat levered, but almost none of it is mark to market. And even if it was mark to market, it wouldn't even be close to 2x levered. I am extremely risk adverse, and so having the optionality to I kind of hope we see some significant downside, some weakness, because I would love to increase that leverage a little bit, but we'll see how that plays out.
Okay, so you are a responsible leverage taker. You're waiting for extreme weakness. So extreme weakness wasn't yesterday, going down to 46 or 44.
Yeah, I mean, I think, what are we off the highest? 30%, 35%, something around there. I mean, that's pretty attractive, and a lot more attractive than levering up at all-time highs. But I'm just kind of looking for not necessarily another March of 2020 event, but I think the best time to lever up is whenever it happens, and it may not happen next year, it may not happen in the next couple, but we're going to get some sort of credit unwind again in the legacy system. And I think that'll be coupled with kind of a derivatives market blow up, similar to what we saw in March of 2020, where sparked by the macro kind of environment and then exacerbated by leverage in the Bitcoin system. And I think that's, there will be another generational time to kind of to stack, but also to maybe speculate a little bit and take on some risk.
Yeah, awesome. All right, well, thank you for giving us your 2 cents on leverage and the market. Let's get into the show. Y'all, welcome to another episode of FedWatch. We finally got our ish together, so apologize for the live viewers who had to go through a couple minutes of technical delays here, but we like to ad lib, and we have one of the best, Dylan LeClair, giving us and dropping knowledge. For this episode of FedWatch, we're going to be diving into Dylan and Sam Rule's deep dive monthly report of last month, as well as what's pretty much unfolded throughout the beginning of December. We also have a bunch of updates around macro and other headlines and global politics. So without further ado, Ansel, welcome to the show. How you doing, my man?
Good. I finally got my camera working. I think that was my technical delay there. So great to see you, Dylan. Thanks for coming on again. Looking forward to it.
How's it going, Ansel? Great to see you as well.
Cool. Well, hey, for the Bitcoiners out there, Dylan is senior analyst over at Bitcoin Magazine, as well as UTXO Management. And Dylan and his team produce an amazing newsletter every single day called The Deep Dive. So check that out. There'll be links in the show notes. as well as, if you go to Bitcoin Magazine or Bitcoin Magazine on Twitter, everywhere else, you can find links to that. But I guess, Dylan, why don't you introduce yourself and talk a little bit about your role at UTXO as well as Bitcoin Magazine?
Yeah, so like CK said, I am head of market research at Bitcoin Magazine and recently joined UTXO Management, which is a Bitcoin fund. Actively looking to get alpha on Bitcoin, the asset, and so we allocate across Bitcoin markets and implement various strategies. Sometimes it's just holding spot Bitcoin, and sometimes it is using calls or puts or various kind of volatility strategies, looking to gain a little bit of beta, gain a little bit of or alpha on the Bitcoin price itself. And so, if that's seeking some downside protection when the market's overheated or not, we do things with a pretty small percentage of the fund, but looking to kind of capitalize on times where we think certain things are mispriced. And so I just joined UTXO pretty recently, about a month or two ago. But it overlaps really well with what we're kind of building out at the deep dive, which is kind of breaking all these things down in real time. And so today we're going to dig a little bit into the monthly report, which, funny enough, was released about 8 hours before the market absolutely tanked. But funny enough is that we highlighted some of the kind of the risk factors in that report. So for anyone that's listening, hopefully didn't catch, or for anyone that was reading, hopefully it didn't catch you completely by surprise.
Awesome. Well, I mean, I think that you did, like you said, you did highlight some things. And then since then, you've been putting out a ton of coverage just talking about what is happening. So I feel like you and Sam, again, have been like a really great resource in terms of like trying to unpack, what is actually driving these price swings and the volatility.
Yeah, 100%. I think with what we're looking at, we do a little bit of a better job than, say, your Mad Money on CNBC or the kind of the legacy world in terms of trying to actually understand why this volatility expresses itself, why certain things occur, and what actually drives the price of Bitcoin over the long run. And some of the stuff that we use with on-chain analytics, that's more of a zoomed out view, month over month, quarter over quarter, year over year. We see these huge trends unfold. And in the shorter term, it's more so, derivatives, equity market correlations, a lot of this stuff, happening in real time. We like to just give both the zoomed in perspective as well as the zoomed out perspective.
So Dylan, what's the at the top of your report, you have the executive summary. So what in November and the first 2 weeks of December, can you give us what your big 30,000 foot view is of the Bitcoin market?
Yeah, so kind of zooming out over the course of Bitcoin, you see these, especially with kind of the on-chain metrics, you see these pretty big trends unfold where you can almost see the bubbles, the local bubbles, the mini market cycle bubbles expressed in real time. And so, I could share my screen if we want to kind of look at some of these charts, or I could just kind of explain it. So I can share my screen here. 1 second. Share screen. So let's take a look here.
Producers are killing it. Let's go.
All right. So this, so here we have realized price, or as labeled in the chart, it's realized cap. So what this is, and I think this underpins one of the core things that we look at. Realized price, realized cap is one of these really cool metrics that a lot of these kind of on-chain trends are built off of. But just to kind of, for the average reader or the average listener to understand, market cap is pretty easy to understand. It's just circulating supply times price. But realized cap, because of the transparency of Bitcoin, we can see realized cap is basically the last time every Bitcoin on the network moved, what was the price at that moment? And we can sum it all up and we get the realized cap. And so over time, you can kind of see that realized cap, it really, it never sees a significant 80% downtrend like the price of Bitcoin. It's far less volatile. And you kind of see like the realized cap is almost a pure form of Bitcoin monetizing. We can see this with full transparency and see it kind of unfold in real time. And so this chart I laid out is color coordinated, and the green is when that realized cap, that realized price is appreciating significantly. It's bending up and to the right in logarithmic scale. And the red is actually when realized price is declining a little bit. So what that means, if there's realized losses on chain, what that's showing is that there's top buyers. Say you bought Bitcoin at 20,000 in 2017, and you moved those coins on chain at 3,000. Well, there's a realized loss there. And so over the red is throughout the history of Bitcoin when the realized price, that realized cap, is actually decreased. And the yellow is when there's been somewhat of a plateau or a slight uptrend, and we kind of call that accumulation or pre-parabola. And so if we want to zoom in a little bit, we can kind of see a closer view of what's occurring over the last 2 years. So this is starting in 2020, and we see this kind of realized price slowly consolidate and kind of prime for the parabolic bull market that we saw at the late months of 2020 and early 2021. And actually in March, we saw one of the few times where price actually dips below that realized price, that realized cap metric. And then we saw kind of a bear market, and now I think we're back in that accumulation phase again. And so this is kind of one of the cool metrics we can look at on chain, and this is the ratio of the two. And so this really gives you a feel. If you look at every market top and you look at every market bottom, you see some pretty cool trends here. And so this is just one metric, but this kind of gives us a feel of where we are mid-cycle. And I think for me personally, I think we're still in the early stages, even though a lot of people think, hey, we're in a bear market or we're going to see 20, 30K. While that's definitely it's not a 0% probability. What we kind of think at UTXO, what Sam and I are digging into with the deep dive is we kind of think we're still in the early stages of a bull market cycle and the lengthening cycle that people have been increasingly talking about, with no blow off top happening this month. I think that has some merit here as we're kind of basing around 45, 50,000.
Yeah, awesome. I was just going to ask you then where you think we are in the cycle. We talked about this last week, and Christian and I are pretty much in agreement that there's going to be repricing events, that shorter term or shorter time frame rises followed by longer consolidations. So what do you think of that idea, and does that fit into what you're seeing with these metrics?
Yeah, I agree. I think kind of the rounded top, rounded bottom thesis, if you want to call it, or maybe that shorter cycles, whether it's 3 to 6 months. I think there's merit to that for sure. It's a lot harder for Bitcoin to go parabolic and see a blow off top and appreciate by 2 orders of magnitude like it did from 2015 to 2017, when it went from $200 to 20,000 in the matter of 2 years or so. I just think with Bitcoin at a $900 billion market cap, it just takes a significant amount of capital for that to occur. And so for Bitcoin to really blow off, and the blow off tops are part of the reason why these bear markets are so long and protracted. You would need to see an immense amount of capital come in, and that capital is coming, but it's allocating slow. And I think it's just a different market structure than it was in the earlier days. And so I still expect Bitcoin to see parabolic moves and kind of these rapid appreciation phases, but I think it'll be more drawn out, and it'll be kind of less not less volatility, but less dramatic than it was in the past, if you want to say that.
One of the things
Hey,
I like
sorry,
about
real quick. Do we want to stay on this chart, or are we done sharing?
Well, I had one more comment on the realized cap. Is that I think it's pretty cool because it's like a moving average, but it's a moving average of on-chain metrics. So that's kind of cool. And gosh, now I just lost what I was going to ask. It'll come back to me. Let's go on to the next chart. Damn.
Well, yeah. So I can pull up some of the on-chain stuff. So this is just kind of a linear version of that chart. So if we're looking at it in log scale, right, this is what the chart looks like. And if you're looking at it in terms of linear scale, what you can kind of see is since the bottom of the market in May, or in May of this year, we saw basically Bitcoin, the realized cap, appreciate by as much as the entire realized cap, the entire market valuation in 2017 at the top. So just in terms of how much capital is actually, like we can see on chain with the ownership, how much capital is flowing into this asset class. it's basically been the entire market cap at the top in 2017. But it doesn't feel like that because Bitcoin is appreciating in an exponential manner and the market is growing in an exponential manner. But just looking at things in linear terms versus, say, in logarithmic terms, you really kind of, it gives you a sense of what's unfolding, even though it doesn't feel like we're going anywhere. About $700 million of realized cap are coming out of the market every day on average since the bottom in the summer. So just for some context there.
Well, excellent. I wanted to ask about my favorite chart, which is because you have like, I don't know, 20, 30 charts on each of these issues, which is amazing. But my favorite chart is the futures open interest. Can we discuss that one?
Yeah, so this is we have a couple different open interest charts here. We have the USD denominated open interest, and this is I could pull up the current chart right now where it would show actually the significant deleveraging. I'll pull that up right here for you. 1 second. But this is the USD chart, and then this is the BTC denominated chart. I'm sorry, that's the BTC margin chart. 1 second. I'll pull up the chart for you real quick on Glassnode. We can get that live chart for you. So here is, can you see this? Perfect.
Yes, sir.
So yeah, so here's, this is the BTC denominated open interest. And then versus the USD open interest, it kind of tells a much different story, right? And so we can kind of see if you denominate in BTC, which basically keeps, it adjusts for price, right? With Bitcoin going up or down, you can see the pretty significant, liquidation or wipe out in open interest from, say, 390,000 Bitcoin all the way down to about 320. So there was a lot of leverage, there was a lot of speculation, and that all got wiped out in this recent move. And so that's kind of one of the beautiful things about Bitcoin is that any dislocation in the market, anyone that's off sides, volatility kind of is what wipes out these players, and it's just the price action is takes the way of max pain, like you like to say, CK. There's no free lunch, there's no free rides, and that's one of the best parts about this market.
Yeah, I mean, I agree. It's the opposite of how the traditional market works right now. If you look at what happened during COVID and the beginning of the Corona crisis, is that Bitcoin crashed really, really hard all at once, whereas like everything else kind of had a lot of stimulus trying to prevent it from like initiating max pain. But since then, Bitcoin and the crypto space in general, because it actually is a global free market, has really outperformed everything else too, because it kind of like it dumped all of its baggage, so that way it was lighter. And I think that that's one of the best things about Bitcoin and why it will continue to outperform. Yes, it may have some painful downturns, but it's because it's free market dynamics. It will also have a lot more dramatic upturns as well.
Exactly. I mean, so this chart right here is the perpetual fund, the futures perpetual funding rate, right? So perpetual swaps, the futures is not something that's very well understood if you're not kind of immersed in the Bitcoin or the crypto space. But what a perpetual futures contract is, it's just a futures contract that never expires and just rolls over. And to keep that price tethered to a spot market, to say, if you log onto Coinbase and swap fiat dollars for Bitcoin, what keeps this kind of synthetic exchange rate tethered to the spot index is the funding rate. And so if this contract extends far above the spot market index, and they use, whether it's Bybit or FTX or Binance, they use an average of a lot of spot market rates. If that perpetual swap contract extends far above the spot price, funding will increase by a wide margin. And so what you see here is, say, for example, this 0.1% funding rate. That's paid every 8 hours, and these traders pay that up as a part of their notional position size. And so if you're paying 10 basis points, 0.1% of your notional position size to stay long, you're paying that to shorts. And so it creates this economic incentive to keep this price tethered to the spot index. And so, for example, like why is there such a huge wick after that March cascade? Well, essentially, you had a bunch of traders that were betting on the price of going up. The halving was coming soon, and there was just some overall bullish sentiment. And all of those traders, all of those positions became forced sellers. So they have to sell their contract. They got liquidated. And what that did was that drove this contract far below the spot index. Those cascading sells drove the price of Bitcoin to $3,800, and it was so far below the various spot indexes, it actually pulled it down, and it paid these red candles mean that you were paid to go long Bitcoin. You were paid every single 8 hours to enter a long contract. And so this is just, again, like you were referring to, say, CK, it's just, it's a completely free market, and any sort of dislocations, whether it's on the long side or the short side, get resolved. And there is no free lunch here. That this essentially, you can think of these rates as almost the cost of capital, right? If you're thinking of it in USD returns, there is a yield. There's a yield that you can get by being market neutral. There's a yield that you can get for forgoing your future Bitcoin. And so seeing this kind of develop and unfold in real time is really interesting.
Yeah, and a lot of analysts say that the next leg up can't happen until the funding rate's negative, right? Then that'll tell you that the most pain will occur to the bears if the rate is negative.
Yeah, I mean that's a really great point. Essentially what you have, if we just throw on a moving average here to make it look easier, right? So this is just a funding rate, and I just threw a 48-hour moving average onto it. And so, right, what you saw at the bottom in July was there was really, really just bearish price action. The charts didn't look great at all, and there was a lot of people that were very, very confident that 30K would break. And so traders in the derivatives market went really, really short. And so, and especially with stable coins as collateral. So they were shorting Bitcoin, and their margin, their collateral was with Tether, right? And so to cover those shorts, as the price bottomed really hard and increased because of spot demand, they had to cover, and their collateral was decreasing against the thing they had to cover against. And so those shorts became forced buyers, and they lost their position size. And so it would be nice from a bull's perspective to see that funding rate turn back negative, and I think that would be a solid catalyst for higher prices. But we haven't really seen that. We haven't seen that funding rate sustain negative in a while.
Do you expect this pullback that we're seeing right now? Are you thinking it's going to look more like July or more like October?
Yeah, it's pretty interesting. I think we're just kind of, honestly, for the time being, we're going to see some consolidation here. Whether that range is 40,000 to 50,000, or ranging from here to previous all-time highs. I think the next catalyst, whether it's a spot ETF, which I think many people believe are coming, including myself, in 2022, or the next kind of large stimulus bill, in this kind of everything bubble. It's just the liquidity is a rising tide for all assets, and Bitcoin being still a pretty small asset at $900 billion, $1 trillion, something around there. It would be a significant boon for Bitcoin to see another sort of liquidity crunch, and then following that some stimulus. And so I suspect kind of right now in the market, we're just seeing incumbents in the Bitcoin space and the crypto space. They're just chopping each other to death. They're just bears and bulls. There's new capital coming in, but it's not a significant amount to really drive this to a multi-trillion-dollar asset class. And so we're just kind of seeing that just resolved with a lot of choppiness and muted volatility.
So what if the next macro kind of event, whether that comes out of China and there's some contagion, or a European debt crisis of some sort, and that comes before this next new catalyst, whether it's an ETF or a new stimmy program, what's going to happen to Bitcoin in the meantime? So you're just saying it's going to be, you're thinking sideways and maybe slightly leaning downward until we get a new catalyst?
Yeah, so I mean, I mean, not to call, not to be a bear by any means, but I think just in terms of potential windfalls for the price of Bitcoin, there's a few things. So right here, Ansel, I'm sure you're very familiar with this. This is the December 2022 Euro dollar futures, and so the Euro dollar market is essentially just an offshore dollar market. And for the December 2022 contract, this is a Euro dollar market is essentially just predicting the Fed funds rate, right? So with the Euro dollar futures at 99, that's essentially saying or betting that the Fed's fund rate will be 100 basis points in December of 2022. So that's predicting 3 rate hikes. And so 100 basis point Fed funds rate when inflation is 6 or 7% doesn't sound too crazy, but what you're seeing over the course of 2021 is that the dollar is strengthening against a bunch of other fiat currencies. And so financial crises, financial tightening. This happens when the dollar is strengthening relative to this basket. And what happens is foreigners have to become sellers of dollar-denominated assets to cover dollar-denominated liabilities. And so, this isn't the do-all, end-all for the Bitcoin price, as Bitcoin is kind of as this chart shows, it's undergoing its own monetization process, regardless of what the dollar does. But over the short term, right? Say, for example, during COVID, we see there can be some significant volatility that expresses itself in the Bitcoin market. And so these are just some things, whether it's the Fed hiking rates 3 times or tapering off their asset purchases. This is some things that give us cause for pause and say that over the short to medium term, it'll be very hard for Bitcoin to go parabolic in the sense that a lot of people thought it would in December, the year and a half after the halving, like it has traditionally, because it is just much more of a macro asset. It's just a much larger asset class, and to really see this asset go parabolic, you need tens of billions, hundreds of billions of dollars of inflows.
Well, eventually we want this asset to become a safe haven, right? So traditionally Bitcoin is, well, not traditionally, over the last couple of years, Bitcoin has been seen as a risk-on asset, like supposed to correlate to the S&P 500 versus bonds or something. But eventually we want it to be a safe haven asset. Do you see that happening anytime in the next year or two, or how long is that process in your mind?
Yeah, so that's a great question. I think Bitcoin is kind of navigating this this path of being a risk-on asset in the eyes of people that are trying to trade and speculate in the everything bubble, right? With yields everywhere, the cost of capital everywhere is essentially zero, right? So Bitcoin as this new monetary asset, there is lots of speculation that occurs in these markets, and more specifically in crypto markets in general, right? And even though a lot of say hardcore Bitcoiners don't care or don't want to care about, say, something happening with altcoins, what you see is a lot of this speculation and other sorts of things actually affect the Bitcoin price as well, right? If alts are all over levered, you can see that expressed in the Bitcoin exchange rate. And so right now, Bitcoin, it's just a function of everything bubble liquidity, but increasingly, kind of the barbell of perpetual inflation or deflation that everybody's trying to navigate. I think what you see is that Bitcoin is a safe haven, and the narrative is it's an inflation hedge. But increasingly, as the everything bubble becomes more and more kind of engorged and at a point of no return, I think it'll be a safe haven against the deflationary side of things, where the exchange rate might get hit, but Bitcoin will maintain your purchasing power, as well as it's a way for you to have your own property rights that is not at the whims of any counterparty risk. And so it's going to be very tough for Bitcoin to outperform BTC USD to pump if the denominator in that equation is pumping. And I think that's what's actually happening when assets sell off, is the dollar is bidding. And so to see Bitcoin outperform in that scenario, I think it's a little too early for that. But increasingly it's becoming adopted regardless of like liquidity or anything else by people all over the world. And so that's occurring under the surface. But in the meantime, it's still at the whims of liquidity and the kind of the credit bubble.
Awesome. So Dylan, thanks so much for sharing all of this. And I feel like I, for the most part, really agree with the long-term vision and kind of how Bitcoin plays in as a safe haven. On this show, we've described kind of what's happening in the world right now is not inflation, not deflation, but it's a monetary hurricane. It's just like honestly utter chaos because the system is that out of whack, and the people who are like supposedly controlling it really they don't have very fine-tuned dials on the economy. It's a much more rudimentary way of kind of manipulating and impacting how the system works. And in my opinion, it just creates chaos. And what Bitcoin is just signal within that chaos. It takes entropy and it turns it into 10-minute blocks, and it's just pure order. So I can't imagine something being a better store of value than that in the long run. But between now and then, potentially we could, I know, a lot of people think that Bitcoin is going to get less volatile in the immediate term. I had a really interesting Spaces conversation last week with Luke Mikic, talking about how, if we are going to have this S curve, it's going to get a lot more volatile when people, have this panic of realizing that they don't have enough Bitcoin and value needs to flow into the protocol. So that is something that it's difficult for humans to even think about what that kind of parabolic increase is going to look like. And, Bitcoin might be a multi-trillion-dollar asset before that even happens. So it could be a very different beast. Ansel, I know that you had a bunch of macro headlines, especially regarding Japan repo that you wanted to hit on. Maybe you can hit on some of this news and Dylan can react, and then we can close this one out.
Awesome. Yeah. So on FedWatch, we like to go around the world and look at the major central banks and what they're doing, not just concentrating on the Fed. And overnight, it looks like yesterday, actually, Japan did an emergency liquidity injection through the repo market. So I'll just read this out here from Zero Hedge. A sudden panicky surge in Japanese repo rates prompted the Bank of Japan to unleash a rarely used tool in an attempt to tamp down any liquidity crisis before it accelerates. Repo rates surged early in the day to their highest in 2 years. Though this is not that unusual given the year-end timing, it is notable in terms of the sudden velocity of the move. Specifically, BOJ offered to buy 2 trillion yen of government bonds under repurchase agreements. Despite drawing down 100 trillion yen in offers to sell at the BOJ's capped rate, the repo rate still climbed, as did the Japanese T-bill yield. As Bloomberg reports, this is the first time since 2006 that the authorities have conducted a repo operation to buy bonds that start on the same day as the announcement. So my kind of initial reaction to this is that it's contagion of some sort out of China. I know that Japan is right there next to China. They are likely very heavily invested into the Chinese real estate market. And I would expect the first kind of international exposure to be seen in Japan. So perhaps this is a contagion out of China. Dylan, do you have any initial thoughts on this?
Yeah, I hadn't seen that until you just mentioned it, but I think it's interesting to see kind of what's unfolding with, not only we've talked a lot about the Evergrande situation and the past reports, and I think you're seeing a lot of weakness in kind of industry names in China, whether it's housing developers or construction kind of companies. They're all kind of cascading in their defaults and their and the weakness in their equity and debt. And so this is kind of what the start of a contagion event would look like. And I think China is increasingly okay with kind of letting a lot of these weaker names, weaker industries kind of fold a little bit, and maybe to nationalize them or take a little bit more control. And so, there's definitely some spillover effects, and it'll be interesting to see how it plays out with the United States, Japan, a lot of these, big international powers with in terms of the contagion and what happens there.
Awesome. And I have one more thing that will take about 30 seconds. Can I share my screen here real quick? All right. This is going to be the overnight repo rate out of the Fed, or the volume of overnight repo that they're doing is going back up to all-time highs. It looked like it could be cooling down here a little bit, but it is back at all-time highs. And this is happening as Japan is experiencing problems, and as all the stuff that we've discussed over the last several weeks happening in Europe. I think this is a significant indicator of stress in the system. That's all I have. I'll stop sharing screen. All right, back to you, Christian.
Yeah, I mean, y'all, I think this is really great information. And ultimately, the most important thing is one, Bitcoin is a macro asset that's playing out across the globe. So, while, the world is currently on the dollar system and everyone really does focus on what's happening with the Fed and what Jerome Powell is saying, there's a lot more going on as well. So it's important to, have a really holistic view. I think between FedWatch and Deep Dive, these are great, channels in order to get that information. FedWatch really focusing on what's happening in macro, and then Deep Dive is what's happening in Bitcoin and across, the entire vertical and in all the areas that affect Bitcoin. Dylan, I guess just to close it out, why don't you tell the audience a little bit more about the specific Deep Dive kind of products? I know there's a couple of tiers on the email newsletter, and there's several people actually working to put out that quality information.
Yeah, so you can just on Bitcoin Magazine website or my Twitter bio, you can find a link to the deep dive. I think it'll be linked under this YouTube show. We have free and paid tiers. So the free tier gets an update about every once a week, and we will release the monthly report a few days or a week after the fact to all subscribers. And then we have that paid tier, which we send out about 20 pieces a month, in depth on-chain derivatives. We incorporate some of this macro analysis as well, to try to keep everyone up to date about what's happening. So if you enjoyed any of this, make sure to check it out, and hit me up on Twitter.
Yeah, I mean, and all those charts that you shared with us, those charts are from the report, right? Like that monthly report incorporates pretty much all the information, and we didn't even touch on all of it.
Yeah, we put about 35 charts in the monthly report, breaking everything down and kind of changing market dynamics and all that. So and it's more in depth than we can kind of cover just talking quickly here on this chat. So if you liked it, make sure to check it out, and the monthly report is open for anybody that wants to go check it out after the fact right now.
All right, awesome. Well, everyone, check out the deep dive. Check out Ansel Lindner at Ansel Lindner. Check me out at CK_snarks. Let's go to the next programming.
Peace.